All right, Rahul Chadha joins us. Let's say good morning and hello to him. Rahul, fantastic to have you back. In the month
Yeah,
of
good
June,
morning.
it appeared nothing could go right. Inflation, crude, central bank policy action, FI selling. In the month of August, looks like nothing could go wrong. 45 days and the world has taken a 180-degree turn. What is right, what is wrong? It's confusing.
No, I think you put it very well, Nikunj here. I think somewhere it pays to temper down our optimism here, like the way it probably paid to be not so pessimistic at that point of time, and why we saw markets bounce so strongly, particularly for India, was that oil rather than going to 150 was at 100. So that was clearly helpful, and because of the reopening, one saw huge pent up demand kind of and come out and play out. Earnings were good. And what we've seen is a result of that under-owned market. Almost everybody was pessimistic. But today, as we sit back and reflect on things, I think I still be a bit cautious because look, the reasons which made us cautious in last 6 months are still here. In fact, some of those things have eased, but broadly the reasons are here. Fed is going to tighten even from here. Balance sheet contraction happens from here. There are some bit of risks on energy security. One was worried about trade deficit. Reserves have come down from 640 billion to 570 billion. So one would be still cautious here, and then we can discuss about the sectors, etc.
Sure. Rahul, there's an important data point. I don't know how critical it may be for you, but the fact that US CPI this time around, and I've been going through some of the reports, is anticipated to be a little bit lower than the previous time. I mean, could this in any way, if the number is lower, that is, be perhaps some signal of US inflation topping out in the near term?
So absolutely, see the inflation stopped up, and that's where this rally in July happened because everybody was kind of trading the peak inflation theory and the hope that Fed would be dovish from here. I think the key thing here, and this is what we all are kind of grappling with, is where does this inflation settle? If this inflation is settling at 4.5% because of, let's say, a shortage of labor in US, wage growth running at 5%, then we clearly have a challenge on hand because Fed is going to then take rates to 3.5%, 4%, which means markets degrade further. But look, if this inflation settles at 2.5%, 3%, I think Fed would be okay with that. So that is going to be the tussle for markets for coming 6 months.
Rahul, do you think the FI comeback is real and it's here to stay? And I'm simply looking at factors like what's happening in China, what's happening in Europe. So India is expensive, but if there is no other market which gives you this kind of a growth, there's a compulsion at play here.
So I think that is a fair thing, and that's what we've been telling to our clients also. Look, India has got its own set of challenges. Valuation is one. The trade deficit is obviously the second one, and obviously energy security, which becomes all the more important in coming winters, is the third one. But that doesn't take away the strong underlying momentum of the economy. See, you've got to give due credit to the government on whatever they've done in terms of infrastructure rollout, digitization of the economy. The benefits of the GST are coming through, and it's a fresh investment cycle. So this is a market which would be a market on kind of a buy on dips for everybody, and that comes out in FIs also that look having reduced their exposure in India now as FIs look at the numbers which have come out this quarter. India clearly stands out in the quality of results, and which is where somewhere that FI sellings also abated. But look, what we are discussing is two different things. Look, if the growth slows down, market may go down. But I think something is for sure that if oil remains around these levels and the reserves significantly do not go down to 500 billion, India would continue to outperform the region.
You know, I was just going through your recent notes, Rahul, and the other point which, sort of stuck out was also the fact that your overweight stance in India is also coming from the fact that consumer continues to remain resilient. And I mean, all the FMCG volume growth numbers, the auto demand, everything seems to be pointing towards that.
So absolutely. So it's a K-shaped economy. Like we were in India last 4 6 weeks and doing our channel checks across 6 7 different cities, and the resilience of the consumer is remarkable. Anybody and everybody who's involved with the organized sector has done well. So the top of the half of the economy is doing well. I think the pain is more in the unorganized sector, more in the SMEs. But look, again, there is a reasonable cohorts of consumer which has income which has saved for last 2 years, is now going out and willing to spend. And we've got exposure to some of the QSR plays where the SSGs continues to surprise very positively. We've got exposure to hotels, which have done remarkably well, beaten expectations by a wide margin.
Rahul, you were in India 4 to 6 weeks back, and I'm sure Mumbai must have been a destination. You didn't come to our studios.
My apologies. Next time I do it. I was more interested in meeting companies and doing the channel checks, but definitely next time.
Do that for sure. Since you're talking about QSR, I also wanted to know whether that list extends itself to the hospitality sector or not, because, we were just discussing Indian hotels numbers, and I mean, try booking a hotel anywhere in India, the room rates or even the availability would sort of shock you.
Okay. So absolutely. I'll give you an example. We were in Bangalore meeting companies and I was staying at a Marriott property, very rundown property. In fact, I literally had complaints with the managers over there, extremely shoddy property, but the rentals were, room rates were 18,000 after a 10% discount or a corporate discount. So these were the room rates we used to hear, if you remember, in the 2007 bull market. So clearly, I think this is what is playing to the advantage of hotels. You look at the hotels, the activity is phenomenal. It's hard to book room. And look, this is all coming through that similar to what we discussed in our earlier interviews about autos. There's a huge pent-up demand which is coming through, and supply has not really lived up with the demand. And today, when the demand comes back, obviously, these guys see better occupancies, they see better pricing power, which is, and they've cut cost over the last 2 years. So that comes out in their strong profitability and margins.
Rahul, what is reasonable and what is attractively priced with a decent earning proposition of 15-20% for next 2-3 years? What is that category? What is that name? What is that group?
Okay, so private banks clearly comes out. Look, it's like sounding like a broken record, but look, HDFC Group having underperformed looks attractive here. They're going to keep doing their job, keep compounding well, and that's where you have good downside protection, which is something which is required for these markets, and strong compounding for next 2-3 years. Outside that, ICICI Access, private banks is something we like. Insurance, I think we can get some bit of a pullback. You will see some bit of a slowdown on ULIP collections for these companies, and one would use those pullbacks to add to that exposure. One continues to like the auto space. Again, I think this cycle doesn't end in 6 months. It's just the beginning of the cycle, and we'll continue to see good momentum for next 2-3 years. So you can pick Mahindra, again, Eicher, whatever one likes over there, that's there. QSR, if you look at the footprint of the restaurants, these companies have average kind of a restaurant would be 300 to 400 restaurants for a company, compared to China, where you have something like Yum China having 8,000 restaurants. So there's a huge headroom to grow. Something which we've liked for last 3 years and continue to be bullish on is hospitals. I believe you were discussing a strong set of numbers from Narayana. Same thing has happened with Apollo, etc. So continue to like the hospital chains, and then is real estate. In fact, something which was very interesting was almost every conversation I was happening with friends, relatives in India was all about real estate. So there is a buzz you're seeing about real estate. Look, it's a cycle which has come back after 10 years. And I'm sure this cycle, though it may be volatile because of US raising rates, but would be at least a 2-3 year cycle.
Okay, Rahul, great to have you on the show as always, and we hope to see you in our Mumbai studios sometime soon or on your next visit.
Definitely.